Start recording our presentation for today. Um, Audrey, can you move us over to the next slide, please?
Yes.
So as a reminder that today's presentation is for educational purposes only, final rates services should be confirmed with a credit union representative at the time of service. So without further ado, I'd like to introduce to you our presenter, Audrey Gurira. Audrey has been with the credit union for over 11 years, 7 of those years with the financial wellness department. She enjoys helping our members realize their financial potential and guiding them towards their goals. Audrey loves hanging out with her 2 sons and her cat. Audrey, I'll check in with you later, but for now, the floor is yours.
All right. Thank you so much, Anna. And we'll just go ahead and get started. Um, After today's webinar, you will understand the importance of savings and how small changes can make big results, and then smart saving strategies and how to stay consistent. So if you're ready to take your inconsistent savings to a higher level, whether you're just getting started or looking to maximize what you've already built, this webinar will give you a clear, realistic strategies to help grow your money with confidence. All right, and why saving money matters. So the first thing, it definitely creates financial stability. It gives you control over your finances, and it also builds a solid savings buffer to help you manage. It also supports long-term goals, and of course, it reduces stress. And then it also reduces your reliance on credit. It also reduces yes, that reliance on credit. So think of some ways that you have built a buffer. Um, if one of those ways include using a credit card or borrowing, then this webinar is definitely for you. You're in the right place. And that brings us to our first poll question. Anna, take it away.
All right. What is your biggest savings challenge? Let us know. Is it A, finding money to save, B, staying consistent, C, unexpected expenses, or D, motivation and follow through? Sarah, what are you thinking?
Um, Personally, for me, mine is staying consistent. I will do really good at the beginning of the month and then just get busy with life. The next month comes around, I just totally forget. Um, but I'm doing better at like saving and forgetting about it, let it the automatic stuff do its
Mhm.
thing.
That's the best
But
way. Yeah.
yeah, but the polling is going to be in the Slido. You may have to find the panel to vote. But as of right now, our attendees have been saying it's a 50-50 split between A, finding money to save, and C, unexpected expenses. But how about you guys? What's y'all's biggest savings challenge personally?
I would say staying consistent as well. I've been doing the automatic savings into another account that I can't see, and that's helped a lot. And I need to do more, but I just end up spending it. So we need all the help we can get, Audrey.
Or you're in the right place. Well, mine would be unexpected expenses right now at this point. I have a lot going on in my life, you know. Son just got married, new grandchild, youngest son just got a job, and so things are a bit crazy right now. So unexpected expenses, I would say, would be my biggest challenge.
Never know when the car is going to break down or.
Exactly like today.
Alrighty,
All
thank you.
right.
It still stayed at the 50-50 split, so
Okay.
yep.
All right. Not bad. So now we know some things that we can use to combat some of these issues that we have discovered that we have, of course, and we'll talk about these more. Look through your monthly spending, find areas to cut back on, and like you guys both said, automation, just those auto transfers can help with that as well. And we'll talk about all that coming up. All right, so preparing for unexpected challenges. So in this scenario, it kind of shows the importance of an emergency fund. Members often relate to real life examples just like this one. And this is crazy because I was just telling them before we started, I had an unexpected situation. My son was driving to work and the car stopped. So now my car is in the front of my house with the window down because the battery died. And so there we go. So now I'm going to have to tap into my emergency savings fund. And this is a real life scenario. This happened today, like a couple of hours ago. So let's just say you have a repair cost of your vehicle that's $800 and you only have $100 saved. In your situation, your options would be to use a credit card or take out a loan. Or there's even the option to delay the repair. Unfortunately, I don't have the option to delay that repair, so I'm going to have to tap into my emergency savings fund. Hopefully it doesn't deplete it, but at least I have some. So in the instance that you don't have at least 500 set aside in this scenario, that means you're going to be short $700. So if you had an emergency savings fund, you would only end up being short 300. So would you rather have to use a credit card for that 300 or take out a loan for that 300? I would choose that rather than having to take out a loan for the 700. So as you can see, at least having at least just a little bit definitely helps in this situation. You weren't there completely, but it definitely helps. So
And
you get an
Audrey, I was
option.
going to say too, a lot of financial institutions offer like deferments or extensions on loans. And so in the case, like you just said, that they had 500, it's better to be short 300 versus $700. So
Right,
if there was maybe a loan that they had somewhere and they can call the bank and the bank can help them, wait for that payment that's coming up, you can use those funds that you were going to use for that. Um, right, instead of
right,
maybe adding more to the debt, a credit card or a loan. So that would be an
right,
option, just contacting your lenders to
right.
ask for a little bit of help. But yeah.
Absolutely. So firsthand example, how that emergency fund can help save you a little bit or a lot. All right. Any questions so far? I know we just got started, but you guys may have some questions. Even if it doesn't pertain to what we've already talked about, you can still put it in the chat and we'll circle back to it.
I don't
Anything,
see
Sarah?
any. Do you, Sarah?
No questions, but to our audience, yeah, just pop them in the audience Q&A and we'll throw them at Audrey and Anna. And we'll also have some time at the end. So no
All right.
question is a dumb question. Thank you.
All
Back to you.
right. All right. Thank you so much. All right. So how prepared are Americans for emergencies? So we'll look at some stats and just personally ask yourself, you don't have to put it in the chat, but ask yourself, do you contribute to any of these numbers? So 63% of US adults say that they could cover a $400 emergency expense using cash, savings, or a credit card paid off right away. If that is you, you're in a good number. And so whatever you are doing to be in that number, keep doing that and capitalize on it and use it for motivation, maybe to even upscale your savings. Also, 37% could not without borrowing or selling something. So if you're in that number, you're in the right place because we're going to give you some tips and tools to try to avoid those types of situations. And then also 13% of adults say that they would not be able to pay a $400 emergency expense at all whatsoever. So if that is you, you're also in the right place. All right, and now let's talk about some ways to start saving. So you definitely want to start small and stay consistent. Remember, small changes equal big results. So understanding where your money goes is the first step towards redirecting it intentionally. So also you want to set up realistic goals, and then you want to track spending to understand your patterns, and then also create a budget that fits your lifestyle. And then automation is big too. It's a big thing on removing temptations. And so if you set up that automation, you already know that you're going to be transferring or $20 or whatever the case may be is going to be transferred out. So that's a portion that you're not going to be depending on. It's kind of like out of sight, out of mind, out of sight, out of sight, out of mind. Either way, but yeah. Um, so you want to understand and anticipate the potential changes from month to month. And then also, a big thing for me when I was saving for a house, I believe it was 2018, 2019, along those years, what I would do is I set up the savings account and I titled it Your New Home. And so it all begins with the mindset. So every time I logged into my credit union account, I saw my checkings, I saw my savings, and then I saw another savings account that I titled Your Brand New Home. You can title it whatever you want. And then what I started to do is anytime we got a work bonus, team award, tax returns, um, every little extra that I was getting, I was just throwing it into that account. Now, this actually works, but if you are struggling with discipline, there's an option to hide those accounts. So that way, when you log in and you see, oh, I've got 10,000. Oh, okay. Immediately, your brain starts to spend that money right away. So what I did to kind of combat that in the beginning when I was starting out, I would just hide it, don't look at it, and just keep the automated going, keep the automation going. After a certain point in time, I started to become motivated and more driven, and I wanted to see what's in there. Okay, well, can I save more? What can I use to motivate me? So at a certain point in time, I did unhide the account. So that way, whenever I logged in, I could see my progress and I could give myself kudos, give myself a pat on the back. And then also, you can use that as motivation to keep you going. So if you have great discipline, then yes, don't hide it. Look at it. Use that as motivation. Also, when you're making those transfers, you can put little notes. So I would put a note that says, you're almost there, or keep going, great discipline. I remember one year it was my birthday. Instead of going and blowing X amount of dollars just because it was my birthday, what I did instead was I transferred a chunk from my checking to my savings account and I put in there happy birthday. And so at the end of a year or two, once I had reached my goal, I used it as motivation to even surpass it. So I started to log in and look at all of those notes that I had put to myself every time I made a transfer. And I just started to use that as motivation to create momentum to just keep going. So if your discipline is in check, definitely don't hide it. Look at it and use it for motivation. Right. So for an example number two, another saving strategy, starter emergency fund. So your goal is to save $500 in 5 months. So this will show how manageable steps can quickly build a meaningful safety net. So you could either do $100 a month, or even cut $25 out a week in optional spending. And I'm sure that we can all find at least $25 that we have spent in one week that maybe wasn't necessary. That's money that we can redirect into starting our emergency savings fund. So the goal is to achieve a process without a major lifestyle change. So let's just say after depositing $25 weekly, that gives you $550 only after 5 months of saving. All right. So now that we know small changes equals big results, so we're going to talk about some more smart saving strategies. So paying yourself first ensures that savings comes before spending. So you always want to pay yourself first. Some people say take care of your responsibilities, your necessities first, and then figure out how much you have to save. Depending on your budget, there is no right or wrong way. If it works for you, then it just works. And then also use high yield savings accounts to maximize returns. So with that, high yield savings accounts are a pretty good place to start if you have good discipline. A lot of this is about discipline. So if you have good discipline, you'll be able to use a high yield savings account. Usually they come with a little more restrictions like minimum daily balance requirements and withdrawal restrictions. So if your discipline is good, this can really help you get to your savings goals a lot faster. Also, set up sinking funds. What that means is if you know that you have a large expense coming up, maybe something that you pay on maybe a annual basis or something like that. Usually it's car insurance. I believe most places give you the option to pay month to month, or you can split it in half, do 6 months and 6 months, or you can pay it up for the whole year. Either way, if your budget does not allow you to come up off of that cash when it's time, you can set aside some funds until you reach that amount. That way, when it's time to pay that premium, you already have it saved. And then you can start the next month. Now that your premium is paid for 6 months or a year, that gives you some wiggle room to start setting aside money for the next payment because you don't have it because you've already, given up the lump sum. So that's what sinking funds are, and we'll talk about that a little bit more as we progress. And then also leverage credit union benefits. This is a really big one. I have spoken with, I'll say many members because some of them had the coverage, some of them did not. And one of the credit union benefits is if you have a loan with the credit union, you should be offered some of those coverages, one of them which is the credit life and credit disability. If you don't know about it and you have any loans with the credit union, or if you plan on taking out any loans with the credit union, this is something that you definitely want to ask about. Most of the time, well, all of the time, they should be offering it to you if that loan qualifies, but if not, just please ask for it. I've had some situations we're speaking with members and they have been off work for a few weeks and they start getting scared because they know that that next check that's going to be coming up is not going to be a full paycheck. Maybe they're out on short-term disability or long-term disability where you don't get 100% of your paycheck. Well, this would be a good example to make sure that you get that coverage because while you're out, those payments will be made on your behalf until you're able to return back to work. So that helps you not deplete your emergency funds while you're off because it's something that can supplement your income and help you. So the money that you are getting from your percentage of your paycheck can go towards other things and you don't have to worry about your loans that you have here at the credit union. So definitely ask about that. I did have a member who called for help. They were calling to get a deferment, and luckily the deferment was available, but they were going to be out of work longer than that 30-day deferment. And so I mentioned, well, did you accept the credit life and credit disability when you took out the loan? They didn't know. They couldn't remember if they accepted it. So I was able to go back into the loan documents on certain situations. One of them did not accept the coverage. Um, so that was all that they were able to get was assistance with was a 30-day deferral. The other one, they did take the coverage and I was able to provide the information that they needed to call and start their claim to get their payment started. So firsthand experience, if you are taking out a loan, it's worth it. All right. So example 3. So we'll talk about sinking funds. They help handle predictable expenses without scrambling for money at the last minute. Like the annual insurance we were talking about. It's $900. So $75 a month in a sinking fund will help you reach that goal. It also avoids stress at renewal time. And then also while you're building that up, in the end, you're going to have the money that you need for your car insurance. You're not going to have to stress about coming up with that lump sum. And then along the way, you have built up a good savings habit, which is the key, is those good habits. All right, so let's talk about some best practices to follow. So regular reviews help you stay on track. Every small improvement compounds over time when you remain consistent. And so if you don't know where you are, which if you don't know what your budget looks like, if you don't know the ins and the outs and what's left over, how can you figure out a way forward? How can you set a goal if you don't know? So the first step, review the budget. You should do it monthly. You can do it as often as every week if needed. Over time, you'll see that you'll be able to stay on it consistently on a monthly basis rather than like every week. And then also, you want to cut unnecessary expenses. A good review of your budget will show you what some unnecessary expenses are. And then also increase your savings contributions as your income grows. And then also staying consistent when progress feels slow.
Audrey, I wanted to add, if I can, to this, the cutting unnecessary expenses, how important that is. I recently had a member actually this week in the office, and we were kind of reviewing his budget, and the best way to come, across all of that is getting your bank statements, your last 2 or 3 bank statements, and getting averages on the transactions, on the bills, and what you're spending on groceries and gas and whatnot, and what, subscriptions are coming out that you might not even be using. But something that we found out, and he hadn't really noticed because his ex-wife was normally the one in charge of it all, but he noticed that $115 or 113, something like that, was coming out every month. And it was a life insurance. And so when he called the life insurance to get more information, it was life insurance for his son that he didn't even know that his ex-wife had added, but his son um was already almost 30, is almost 30, and he's in the military living his own life with his own insurance, and probably even better life insurance than the one that he had. So he had no, idea about that, and he called and was able to um change that. I'm not sure if he went ahead and canceled it, but he was like very impressed that that was $100, that he would be saving because he was currently struggling to make ends meet. So yeah, those,
Okay.
just reviewing your bank statements. That's very important.
Absolutely. Absolutely. I agree with
Hmm.
that. And then also, like, if you anticipate, or if let's just say today you say, okay, I'm going to start my emergency savings fund now. I'm going to stop turning down this overtime that my job is offering.
Hmm.
Yeah. So,
Yeah.
accept that overtime, go ahead and take care of that, and just, utilize that to jumpstart your emergency savings fund. And while you're doing that, I'm going to go a little bit deeper. Let's just say you
Hmm.
start accepting that overtime so you can really jumpstart that emergency savings fund. So working a lot of overtime, a lot of us have gym memberships that we will no longer be able to use for an extended period of time while we're working and focusing on that goal. So reviewing your budget, that might be one thing that you can cut out permanently or temporarily. Some of the subscriptions, if you're going to be working a lot of overtime, you may not feel like you're getting the best use or the best bang for your buck with the subscription. So maybe you can temporarily suspend some of those subscriptions while you're in the process of building your emergency savings fund. So it can get really deep. All right. So example number 4. So it is possible to save while paying down debt. A balanced approach ensures steady progress in both areas. So if a credit union member is wanting to save but has monthly debt payments and they have limited discretionary income, sometimes we can recommend a 50-30-20 framework. It doesn't work for everybody, but if it works for you, keep rocking with it. So what that means is 50% of your income goes to your needs like rent, mortgage, utilities, transportation, health insurance, things like that, if those are things that are not already coming from your paycheck. And then also minimum debt payments. And then 30% will go towards your wants, like dining out, vacation, travel, hobbies, subscriptions, things like that, or even shopping for non-essential items. And then 20% of that will go into your savings and for debt repayment, emergency fund contributions, retirement account funding, and also even some minimum payments, some extra payments beyond what you're paying it for your minimum payments. So that's just one solution. It doesn't work for everybody, but we're here to provide a few ways so you can kind of pick and choose what works for you. All right, that brings us to our next poll question. Anna, take it away for us.
So, how do you plan to start saving after Audrey has helped us and taught us a bunch of cool stuff today? What do you feel is going to work best for you and your savings plan? Is it A, automatic transfers, B, sinking funds, C, roundup apps, and D, emergency funds? Which one works for you? Let us know. I'm going.
Personally, oh, go ahead, Anna.
No, you go ahead.
I was gonna say personally, for as long as I can remember, I was pretty young when I discovered Acorns, the app. I don't know, Audrey, you're gonna talk about it, but that's one of the apps where I've like kind of set it and forget it, but I like that it just rounds up all of your purchases. So,
Yeah,
and
that's a good one.
I think now it even lets you invest
Right.
with
Mhm.
within it, which
Yep.
is really cool. But
Mhm.
for me, I think majority of my savings come from automatic transfers. But I'll let you guys know what the audience says before I ask you. Another 50-50 split between automatic transfers and the emergency funds. But what about you guys? What is y'all's go-to?
I like to do either automation or another thing that I like to do that works, whatever I have left in my checking account before direct deposit goes in, that's money that I haven't used. So sometimes I'll just throw that in there and just kind of start the process over. That works too. So,
Yeah, I would go with A and D. That's currently what I do and what I've been doing for a few years, and it seems to have worked for me. I also do what Audrey mentioned earlier, titling your savings accounts. So, one of my savings accounts is my son's name, and so, um, that helps. That helps me not ever try to use it because it would make me feel really guilty if I did.
yep.
So I don't touch that one at all. And it was just funny that Sarah, you mentioned acorns because I absolutely hate Roundup apps.
Really?
They work for a lot of people. My husband used to do that before we got married, and it worked great for him. He loved them. He actually used acorns, so but then he got married to me, and I was like, no, we're not doing that.
Wait, why do you not like them?
I just don't like seeing random change come out of my bank account, and
Mm,
like seeing like little pieces just all over the place. It's too much for me
that makes
personally.
sense. Yeah,
Personally.
that makes sense.
It
Mhm.
does. It makes sense. But I personally know someone who uses the Acorn app, and they were like, I looked in there one day and I had over $250, just there. And I was like, did you know that you can have them invest that for you and grow it? So, yeah, it works, but it's not for everybody because that would drive me crazy too. As much as I log in and look at my transactions, it's like extra work for me. I'm like, nope, I can just automate that. But yeah. All right. Moving on. All right, so these are some additional resources that can help you reach those savings goals. Certified credit union financial counselors. This is available to members and non-members alike. This resource offers financial counselors who can help you with things like creating a budget, repairing credit, or staying accountable. So a lot of our most incredible member stories involve this group of dedicated employees. Hi. And so also experts in financial assistance for bruised credit situations, also advanced financial indebtedness solutions assistance. So if you have a lot of debt and it's kind of all over the place and it's maybe outside of our scope of assistance, we can still refer you to agencies that can assist you with what you need. Also, we provide continuous accountability, support, and guidance. So if you say you need us to call you for a follow-up just to check in every week, we got you. We'll put it on the calendar. You'll get a phone call every week asking you, hey, how's it going? You know, did you mess up? Okay, you know, how are you going to do better? Or, okay, you messed up. Here's a tip to help you do better next time. So we provide all that, whether you need it weekly, every 2 weeks, once a month, or if you don't want us to bother you for every 90 days. It's customizable, so it's up to you. Um, we also provide educational seminars and webinars throughout the year, similar to this one that you're attending now. Our contact information is 833 Finwell. You've probably seen that all over the place. Also, we have our email address listed there. And let's take a look at some more tools and resources. Please know that we are here to help. Every appointment is confidential at no cost to you. We'll review your credit report with you, help you set up a savings and spending plan to save you, to change your spending and savings habits, and give you suggested ways to reduce your debt. Some of those ways are financialwellness.aacreditunion.org. That is where you can go and read all about our department and the things that we assist with. And it'll list other resources as well, like the Navigator. And then, of course, our online banking app is a really big one. If you use online banking, you would go under the menu tab under Financial Wellness. That is where you can also check your credit report and score. And then also our, oh yeah, that was it, the credit scoring report with the credit monitoring through Savvy Money. And so we offer educational webinars throughout the year. And thank you so much for joining us. That is all we have for now, so just keep an eye out for future seminars that are coming up. All right, Sutton, take it away.
And if anybody has any questions, throw them in the chat and we'll answer them after I do these last few slides. But if anyone is on the call and is not a member and would like to start their member journey today, you can easily do so by scanning that QR code and using promo code BD4412 at the end of your application. And that code is going to take care of the initial new member deposit of $6. So you have nothing to lose. Plus, once you're a member, you're always a member. That means if you decide to take another job opportunity outside the air transportation industry, you can still retain those credit union benefits and still continue meeting with your financial wellness counselors. And once you join, you get to share the benefits of being a member with your family, your permanent household members, and coworkers who are eligible to join. And whenever you refer them, you get $25 for each referral, up to 10. So definitely take advantage of that if you haven't already. And next slide, please. I'm just going to go over a few of our current quarterly offers we have that you can take advantage of from now until the end of June. You can save up to 0.90% annual percentage rate on your next auto loan. You can earn up to $90 whenever you open a new checking, set up direct deposit, and make at least 9 debit card purchases a month, earning $30 monthly for each of those 3 months. And a total of 9 winners will win $10,000 each in our 90th anniversary sweepstakes. There's a total of 20 different ways to get entries, but first you must register to be eligible to join. So check that out when you scan the QR code, or you can go to our offers page for more details on those promotions and how to register for the sweepstakes. Lots of 90s happening, so definitely take advantage. And now I will see if we have any Q&A questions here. Let's see. So what happens once you hit your emergency savings fund goal? Like what what do you recommend to do after that?
I would say do it all over again. Start over, match that amount either in the same account or a different account. And whatever you did to achieve that, capitalize on it and just keep going. Use it for motivation.
Okay. And is there any other apps that help automate savings or do anything like that that you guys know of that you recommend?
The only one that I know of is the one that we talked about, which is the Acorns. And then also I know here at the credit union, you can set up automatic transfers from your checking to savings. So, and then also, if you have another financial institution outside of the credit union, you can do external transfers. You can have those funds from your other bank or credit union transferred into your credit union checking account. So there's really no way around it.
And if you work for American Airlines, this is what I do too. If you work for American Airlines and you have access to JetNet, um, when you go to like your direct deposit pay portal, you can set up there an amount to go directly into your savings account. Um, that way, when you get your direct deposit, your paycheck, you're not having to make those transfers yourself. Like it's already taken care of
Yep,
from your paycheck.
I think that's the best option.
I think automation seems to be like the best,
Yeah.
setting it, forgetting about it.
Yep.
But I don't see any more questions. Anna, do you have any questions on your side?
No, I don't have any here.
Alrighty.
Okay.
Well, thank you all again for joining us today. Thank you, Audrey, for the info. If you guys have something a little bit more personal you'd like to discuss with a financial wellness counselor or credit union representative, just let us know in the survey and we'll follow up early next week. You can also indicate that you'd like a copy of this presentation on the survey, and we'll send that out early next week as well. But be sure to check out our event schedule on our website for more details and the topic lineup for our upcoming financial wellness webinars, and stay connected with us on social media. Follow us on Instagram, X, and LinkedIn, and be sure to like and to subscribe to our Facebook and YouTube channels where you can watch previously recorded webinars anytime. But on behalf of Anna, Audrey, myself, and the entire credit union team, we truly appreciate you guys tuning in today. Have a wonderful rest of the week and weekend. Up to my co-host panel, anything else you'd like to add before we close this out?
Um, just a few friendly reminders. Just a few takeaways just in case. Start or revisit your budget today. Review and cancel unused subscriptions. Track your spending. Shop smart. Look for ways to cut back. And that's it. And if you need us, please call us. We are here for you. That's all I have.